All right, what the heck just happened to Palo Alto Networks? Sending stock plummeting after hours trading. The best-of-breed cybersecurity outfit reported a solid set of results, but then gave surprisingly grim guidance. Palo Alto cut its full-year revenue and billings forecast, giving a disappointing outlook for the current quarter on every line except for demand, which they said is strong. Let's check in with Nikesh Arora, the chairman and CEO of Palo Alto Networks. He had a better read on the quarter. What comes next? Mr. Arora, welcome back to Mad Money.
Thank you very much, Jim.
Nikesh, it's great that you're here because I think that there's, let's put it this way. Last time you were on, there was a tremendous emotional moment that everybody sold, and it turned out to be wrong because they were thinking too short term. I'm wondering if that can't be the same here. You're taking your company, instead of just selling piecemeal, you're going platformization. I've seen this happen to other companies. It hurts them short term, and then their margins fly up longer term. Is there a problem with demand, or is there just a consolidation, platformization play that's going to make it so a year from now, Palo Alto Networks is going to be making a lot more money than we think?
Well, Jim, I hope you're right. We should be making a lot more money from a year from now. I think, first of all, let me reiterate, there is no problem with demand. The attacks are increasing. AI is creating more attacks. You're beginning to see state actors out there in the public domain being there's risks being attributed to them. So there is a tremendous amount of negative cyber activity going on, unfortunately, and we need to all continue to be prepared for that. There is no problem from the demand perspective. If you look at our quarter, we had the best earnings beat this quarter in a long time. Our margins are 29%. We beat revenue, we're closing billings, and we had phenomenal profitability and phenomenal cash flow. So there's nothing wrong in the demand function. We're forecasting that we want to take this somewhere else, and I think that's where the market's getting a little jittery.
Yes, but at the same time, you use the word fatigue when it comes to getting more cybersecurity. Well, you know what? There are a lot of teams that are fatigued, but it doesn't matter. They still have to win. I would imagine that a fatigued team still has to spend because it only takes one real bad hit to have a Clorox. I mean, they would like to be fatigued. I don't want to be Clorox fatigued. You know what I mean?
Well, let me clarify. Fatigue, as it relates to having to deal with multiple cybersecurity vendors, try and make them all come together, try and integrate them, try and respond to bad actors who are coming at you at a mile, as fast as they can, while you're dealing with legacy infrastructure where you have to take time to put stuff together. I think it's time to stop doing that, and it's time to start applying AI-generated models, take them and deploy them so we can get you a faster response time, get you better total cost of ownership, get you better ROI from what we're offering. And that's the need for that consolidation and platformization. So it's not like people are not spending money. I think my cybersecurity budgets are still going to keep going up in 5 to 10% a year, but I think they want more for what they're spending.
I'm scrapping the word fatigue because it's sending people to the exits. Now, let's talk about something. There's a FBI director, Christopher Wray, on Sunday. He's talking about basically a cyber war. Okay, and he's making a point that infrastructure is in trouble. Obviously, the federal government, the Chinese hacking everything. But I read that the federal government's not spending as it was in cybersecurity. Now, I mean, did they go to college to get stupid? I mean, what's the point of that?
I think it's very important to parse what we read over the weekend. What we read over the weekend is there are a lot of enterprises and public sector enterprises as well, where we believe there are bad actors who are camped out. And I think that means all enterprises, all public sector utilities, all infrastructure components have to spend more money and get more current and get rid of legacy vendors and go towards platformization. We think that's going to happen. In terms of the federal spending, which we alluded to, we had staffed up for a very large project which didn't materialize. And that was a miss for us in Q2. We were able to cover that by shipping a whole bunch of non-product backlogs, so we're fine. But we think that's not going to materialize for the rest of this year.
All right, so let me say, Bill McDermott, ServiceNow, has come on and he said, listen, federal spending is gangbusters. It's AI spend. He's talking about doing cybersecurity. Is he the reason why Palo Alto is not getting its big federal orders?
Bill is a good friend and a great customer. I don't think he's doing cybersecurity as much as he's doing an amazing job in workflow management out there. But no, that's not the reason there's anything wrong with Palo Alto.
Okay, now I want to be sure nothing's changed in terms of the companies that are, again, I'm trying to avoid the word fatigue, that are confused about spending. Do they understand the SEC's rules about being hacked? Or are they just saying, you know what, those two are too hard to afford right now. We'll put them on another shelf.
Oh, no, I think, Jim, as I mentioned in our earnings call, the amount of conversations that we're having with CIOs and CEOs is at an all-time high. I think the awareness, the need for them to have a much more secure infrastructure is at an all-time high. I think they just want a more bang for their buck. They want to be more secure, faster, with deployed AI in their platform. That's what they want.
Okay, so tomorrow people are going to come in and say, okay, the stock's down $80. But one of the things that Nikesh said on the call was that there will be a dip that you will see before there's an acceleration. You said, for instance, the federal government, you said the next quarter, the quarter after that may not be that good. Is this a dip, or should I use the word abyss?
I don't think, unless you're calling a technology abyss in the future, which I don't think you are, unless you're calling an AI abyss, there is no cybersecurity abyss. I think this is a reshaping of our demand curve so that we can grow faster in the longer term. We want to go ahead and platformize our customers. We want to be able to execute with them as they want right now so we can drive this business to a bigger number in the future years.
Well, do you think that the others who are not sharing your platformization view are going to come after you in the interim and cut price, and take business from you?
Well, Jim, we have a lot of platforms to be able to amortize any execution risk takeaway. They will have one platform. So I don't think anybody who wants to compete with us should be doing that. That would be a bad strategy for them.
All right, so when we look back at what happened here, I'm wondering, was there a way to be able to say at the beginning of the year, look, be aware that we have to kind of change our view and become more holistic. There's just too many different pieces here. Because there is a sense that we just rolled back all of what's been so right with the stock of 2024. You rolled back every single dollar.
Well, Jim, you know what? Sometimes you have to consolidate to go out and double from there. So I'm not worried about the stock price as much as I think, let's go back to the basics. Our business is strong. Demand is strong. We're executing better than we've ever executed. We're leaders in 21 categories today. 5 years ago, we're in one category. We have salespeople out there who are dealing with CIOs and CISOs every day who want to go ahead and get their cybersecurity platforms cleaned up as quickly as possible. That's what we're driving towards. That should drive our business to a much higher, much better number than where we are, than the world expected 12 months from now. So I don't think there's anything that's letting up right now. Okay,
so maybe I had Shantanu Narayan on this morning. I remember at one point he came on and he said, look, we're doing business piecemeal. We're going to make giant platforms. Stock got down 30%, and then it tripled. I mean, maybe, just maybe, we're catching this down 20% before the triple. Or maybe I just think that you're such a good manager and a good company that I, too, am drinking something that I shouldn't.
Now, Jim, we're all committed here at Palo Alto Networks as a management team. We think this is the way the industry needs to go. 5 years ago, we embarked on a platformization approach versus best of breed. We proved to the world that we can do that with cybersecurity where nobody believed it could happen. We've built an evergreen company. We think the biggest opportunity ahead of us is AI. We think that's going to create a whole new set of cyber vectors, and there's nobody better prepared than Palo Alto to deliver against that threat. I keep saying, AI is the first time that the people who are incumbents with large amounts of data have a strategic advantage. And by that metric, we have the largest amount of security data in the world.
Okay, I am no longer fatigued, both by what you say and because I think we should exercise that from the transcript. Nikesh Arora is Chairman and CEO of Palo Alto Networks. You came on, good, bad. Thank you very much, Nikesh, and maybe I think better next time. Thank you.
Thank you, Jim.
All right. Look, I'm going to have a full report tonight for members of the club. And remember, we got a big meeting Saturday. We're going to talk about what we're going to do with the stock. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.